Good morning, everyone, and welcome to the Sirius Report. Well, Paul, it is appearing more and more that America's gambit to invest the wealth of the nation into AI is failing badly, with stocks revealing over the past few days that the bubble is starting to burst.
Yeah, absolutely. And it's not a subject that's discussed very much. I think everyone thinks that AI is, frankly, from my perspective, something it isn't. I'm not saying every AI company or every AI project is a total failure. Absolutely not. But what I would say, to me, a lot of it still, and we're not going to get into specific companies or anything like that, is relates to nothing more than advanced relational databases. And I've utilized certain AI products and tested them, and to be honest, they've had some degree of interest or some degree of success, but still, they don't achieve the objectives that I'd want from them at this point in time. That doesn't mean, of course, they won't do in the future, because artificial intelligence is a learned thing, but I think people's science fiction version of what AI is certainly doesn't apply at this point in time. And all this fear of, well, robots could take over the world, we're a million miles away from that, quite literally. And yes, I think currently, to a large extent, AI is in a bubble. And I think that could blow up, for example, the US financial system rather alarmingly. And that, of course, would then set in a contagion process of blowing up the rest of the Western financial system, because enormous sums of money are being invested and thrown into this. And what the concern would be is not only are these projects viable, even if they are viable, what are their objectives and what are these objectives actually achieving? Because you can throw huge sums of money at something, but if it doesn't actually achieve anything that means anything, then it's just capital destruction. Because if that project doesn't deliver on that investment and provides a return, then that's capital destruction. It's just pandering to someone's whim. And ultimately, that is exactly what happened during the dot-com era, and I had experience of that. Mentioning no names, but I took time to out of the whole banking system and went and spent a bit of time for a year in the dot-com world, and I saw things that were frankly outrageous. And that was just enormous capital expenditure that achieved absolutely nothing in the main. And it was one of the biggest sources of capital destruction in history. Maybe $1 trillion got wasted, maybe even more. Huge amounts of money were pumped into to businesses that weren't actually going to turn a single dime in profit. And eventually, this huge sum of money was burnt on frivolous activities that, as I said, delivered nothing. So I think it's very much a situation where we would arguably be in what you would term, not entirely every company, of course, but not every company was a failure during the dot-com era. The vast majority were. But this is very similar to what you would term the dot-com era, when massive, as I said, sums of money were invested with no return whatsoever. And that was never going to be the case. But there was big expectation from the outset that this was the revolution, the tech revolution of the late 90s. So I think what hasn't helped is what China's doing has been done much cheaper, that's more effective, but they're also a million miles from AI actually being what people perceive it to be.
Yeah, the fascinating thing is the AI bubble, and inevitably it is a bubble because and I don't know really when. I think it was probably when some of the more powerful chips that started coming out from the big tech companies. It started this push towards AI because In reality, and I tweeted this out yesterday, I said we do not have AI. AI, from the science fiction writers to the definitions, dictionary definitions, AI is artificial intelligence, which implies a sentient uh, individual thought by a machine. But in this case, these are not sentient evolving machines. These are algorithms, algorithms programmed by people, by humans. And all you have to do is take a look at one of the more recent ones. I think it was ChatGPT, their next version. They had to take it down because the programmers and the coders had to rejigger and modify their quote unquote AI bot. Really, what they're doing is they're readjusting the algorithm. All these things are algorithms. And there's nothing wrong with algorithms because go back to the days of the late 1800s, Babbage creating the first quote unquote computer model, which was an algorithm. We saw in the 1950s and 60s the rise of using computers. The most famous is the one that broke the Enigma code. That was simply a machine that ran an algorithm to try to break the code. These things are not sentient awarenesses by machines. These are algorithms programmed and coded by humans. Now, if they were seen in that light as helping companies be more efficient in their business models, then that's something that's all for it. But because they've been pushing this belief that AI is going to supersede and take over all this from humanity, uh, unfortunately, so many companies decided to get onto the AI bandwagon. And there was an MIT study a report that just came out. 95% of generative AI pilots at companies are failing. Well, as you mentioned, is that any different than all those dot-com in the late 90s, dot-com companies that promised in the rise of the new internet that they were going to have all these different things, whether it was pets.com or whatever that failed. And then take a look in the early 2010s, after the great financial crisis, we had the rise of cryptocurrencies. Once Bitcoin and Ethereum and Litecoin started getting a little bit of traction, everybody made a cryptocurrency. There was a one for bananas. There was a coffee cryptocurrency, a donut cryptocurrency. Everybody and their brother got into the cryptocurrency scheme, and they all faded away. It's the same thing with AI. We're seeing that all these companies are investing so much money, and it's based on that stupid AI trade that Wall Street is doing, in my opinion, stupid, that is driving up all of these market caps and investments. Well, guess what? Behind the scenes, the insiders for most of these companies are selling. They got the retail investor, the greater fool, to come in and buy this so they could sell with all the at these new all-time highs. Well, I hate to say it, the smartest investor probably of all time, he is not investing in AI, and he sold out as most of these companies started pushing this, and that's of course Warren Buffett.
Yeah, absolutely. And with regards to this MIT report, which said 95% of companies are getting, have zero return on investments. And obviously, AI is something that's underpinning all these massive increases in and it's tied in with AI. So if AI was to capitulate, then you would end up having problems propping up all these speculative tech stocks. And the argument, therefore, on that basis will be if there's a recognition that this is just not entirely, but effectively another dot-com in the making, and that the vast majority of AI companies are just bubbles, then if the house of cards comes down and the whole thing blows up, then the argument would be this could seriously impact US tech stocks in a very negative way. And given the argument is those tech stocks are effectively the US stock market now. You can see on based on financialization that that could cause a major problem and blow up the US financial system in the process. And that's not an exaggeration. But when you have a report based on all many, well over 100 interviews, surveys of employees, and obviously all these AI deployments, the thing that would I would find alarming in all this is, and this is I'm not being ageist about this because I'm not ageist in the slightest. I think if someone's good enough, they're old enough. But there are startups being done by teenagers who may actually have a really good idea and they may execute something particularly well. But is it, and they may deliver on what they say they want to do, but someone goes and invests millions, tens of millions on these projects. But in the end, what purpose does it serve? Does it actually fulfill anything of any substance, or is it just a means to an end? And it ends up where, as I say, you have enormous capital destruction. Okay, maybe someone can turn it into a profit, but is that sustainable? And that's highly questionable. And that's just for a small percentage who, even if they can turn some profit, it's highly questionable for the others who don't. I mean, and then it's a question of, well, why are they failing? I mean, and, the MIT report points to what it's called flawed enterprise integration. It says, people will blame regulation or model performances, but they regard that as more of a problem. They said generic tools can work for individuals, but when you use it at the enterprise level, it's not possible to do so, which is entirely possible. And that's the thing, we don't understand the technology well enough at this point in time to whether that's a viable proposition or not. But if you've got huge amounts of companies, all this money being thrown at it, you can end up destroying businesses, sorry, can destroy enormous amounts of capital and investors get burnt in the process. And the report also said that over 50% of what it calls generative AI budgets are devoted to sales and marketing tools, but MIT found the biggest return on investment was in back office automation, and it says eliminating business process outsourcing, cutting external agency costs, and streamlining operations. But what does this mean? Well, businesses just go in and say, well, okay, we're on the basis of this, we can slash all these human beings from being part of the business. Well, maybe or maybe not. And I think we're jumping to conclusions that we can wipe out most of the people's jobs. Now, the risk is in the future. There could be a huge problem with AI replacing humans when, as Ken says, something what you may perceive to be sentient can fulfill a job role, but at the moment we're a million miles away from that. So my general concern with this is that people can work on technology solutions, but ultimately, when you're in the first phase of any new technological breakthrough, how much of that's going to be relevant in the future, how much money's been invested, and how do you get a return on this investment either? I mean, seriously, if you throw 20, 30, 40, 50, 100 million into a business, where's the return on it? And then the question is at an enterprise level, you need enormous amounts of energy, you need enormous amounts of processing power and to achieve the objectives they want to. Although in China's case, they proved that small is beautiful and not big is beautiful. But look at even in the US, the Trump administration had that Stargate project. I don't think anyone's mentioned it. In fact, there was talk of problems financing it, but if you want to finance $500 billion worth, I'm not surprised there's problems financing it because the question at the end of the day is, what's the end product? What are you actually going to deliver on? where's the return on the investment? And I largely don't see any return on investment for most of these projects. And in the end, is it sustainable to have a return? So when you get massive capital destruction and ultimately it comes in and proves to be a bubble, then you're going to start, that's going to affect the world of financialization enormously. And the catalytic effect is it causes ultimately a blow up of the US financial system by extension. Because again, we're back to what are real asset prices of businesses as opposed to what financialization says. And if your premier stocks start to falter because of this, then that has a contagion effect of dragging the rest of it down. And when that happens, as I say, very, very quickly, markets turn, and then the absolute reason why you should not have financialization and asset bubbles then comes into play. Then the serious problem of blowing up financial systems becomes a reality rather than a hypothetical.
Yeah, one of the big things that stands out to me, and when we talk about bubble, let's listen to the words of OpenAI's CEO. He was on CNBC yesterday, and he said AI isn't a bubble, but here's the stickler. But he's ready to keep aggressively spending on infrastructure. So it's like, hey, we know there's a problem, but it doesn't matter if we spend more money, we're going to resolve the problem. Well, that's sort of the go around definition of insanity. Keep doing the same things, put more money into it, and expect and hope that the problem goes away. But what else is a part of this that we're just starting to hear about is the amount of energy that's going to be required to run the data centers that all these big corporations expect to build. So much so that some of the big tech companies are putting in their mic or want to put in micro nuclear facilities. Well, let's get into that problem. One, are we going to have corporations rather than government regulators monitoring nuclear facilities? Secondly, we already are seeing in the East Coast of the United States alone, not to mention what's happening in Europe, Spain, for example, et cetera, when they had their blackouts a few months ago. But the cost of energy, because of bad choices, the green choices that we've seen over the last few years, the grids cannot handle this type of power. And we're talking AI runs on an exorbitant amount of energy and electrical power. So the problem I see in the West is everything is reactionary. Somebody gets an idea, instantaneously it's accepted as an idea. People put, hundreds of billions, if not trillions of dollars, companies put it in, and they never take the time to actually sit back and plan for all the contingencies and what is required, what the potential pitfalls are, etc. We used to laugh at the old Soviet and Chinese 5-year, 10-year plans. But the reality is one of the reasons that China has been able to be extraordinarily successful in a short amount of time for a lot less money and capital is because they have planned this out. They saw the idea, they discussed all of the caveats regarding it, and they said, let's go ahead and do it. And they started investing into it and started building it, and they were able to do, and they've been able to take AI and put it to specific things that are important, such as running the train, such as in the military, their drone program, robotics. Okay, these are not taking away jobs from people on the base level, at the city level. But unfortunately, United States, everything is so wide and extreme that we need AI in everything. Well, we've had these things called high frequency trading computers. That's a form of algorithm intelligence, and it has really destroyed the financial systems and the markets through financialization. So not everything in itself is intrinsically bad, but depending upon which culture and society is doing it, the outcome it's extraordinarily different.
Yeah, absolutely. And just a final point I'll make, because it's a huge subject there, is is this idea everyone needs AI. Suddenly all companies are going, we need to put AI in our business. What do you, for what purpose? Well, we just need to. So I'm going to deploy AI because this is a cost saving. We can start streamlining our business. And then they start going, well, how are we going to do this? Oh well, we'll purchase AI tools from a vendor, and how successful is that? It's debatable. And then there's other companies going, no, we'll do it ourselves. We'll build our own. That's probably even less successful. And then when you realize that this is going to be deployed in financial services, in highly regulated sectors, you know, this is a recipe for destroying businesses just on the basis that, well, we have to have this because we can streamline the business. Then you're going to create massive unemployment. And then you might end up having to rehire people because you realize actually your AI model, while it's clever in some ways, AI in the loosest sense of the word, half the time, it actually can't do the jobs. And then so you could end up wrecking businesses across the board. And if you start to do it in regulated sectors and in the financial sector, that is extremely damaging. So it's not just it's a bubble and all these there's companies producing solutions that waste enormous amounts of money and it all blows up in their face. That's bad enough. What's even worse is when people try to or companies implement solutions that are destined to fail and will fail and they wreck their business model in the process. And if you have this idea in highly regulated sectors where AI, in inverted commas, starts to be a decision maker and you replace humans, I'm not saying it's humans necessarily in the financial world do make good decisions because often they don't, as we know. But, you know, this is a big problem, and companies are like either cutting people back on this basis or they're just not hiring people. And so when people leave positions, they go, oh, well, I can fulfill that function. Well, this is a very dangerous step. And that's why they're like all these potential bubbles, there is going to be huge problems that will result from the fact that there's been this massive over expectation of what it's capable of delivering.
Indeed. Well, thank you, Paul, as always, for your insight regarding this.
Yes, and likewise.
And to everybody here at the Sirius Report community, as always, thank you for your support. Don't forget to like, share, subscribe, comment, send this out to anybody you think it might be important to. And until the next time we get together, have a great day.